What's up?
Hey, let's go. How's it going? Can you hear me?
Did you say me?
No, I said hi. You can hear me, right? Just make
I
sure you
didn't
can
know
hear
if you're.
me.
Yes, I can hear you. Hello,
Great.
Steve.
Hello, Annie.
Hi,
Thanks.
Scott. Hi, everybody.
Hey, yeah. All right. Welcome to the trade of the week. See how out of practice I am? Because what has it been like 4 weeks or so? We haven't done
It's
this
been a while. Yes.
this Tuesday session. So here's our title. We usually have people start to file in as I go through the disclaimers. Yes, long time no see, Dave. Hello, David. Right, just a reminder, Andy and I are users of the program. We've been users before we even became employees of the program, still of the software. We still use it, but all of the opinions that you hear today are ours only. They're not to be considered financial advice, nor the ideas of trade ideas. You know, that between the two of us, we've probably got almost 50 years of trading experience, getting close, and these are just our opinions. But you know, we always try to give you guys our opinions. Towards the end of the broadcast, of course, we open the floor to general trading questions and any charts you guys want to look at. So I'll just drop that hint now, so when we get there, maybe nobody's caught off guard, and we'll proceed. Quick reminder that the Trade Ideas is a very feature-rich program platform, and it's not really something you learn quickly overnight. It takes days, maybe a couple weeks to really filter the data that you want to work for you, whether you're a high-speed day trader, scalper, momentum buyer, pullback buyer, or if you're a position trader or you only want fundamentals mixed with technicals, or you're a swing trader like myself and Andy who try to look for those 1 to 2 to 3 day moves. The program will be there for you, but you just got to kind of figure out how to talk to it. So that's why we remind everybody that we have a free room, which Barry hosts all day long, but we give them a break between 12 and 1 and also 3:30 Eastern. Highlight there so you guys can just imprint on that. 2 times a day, 1 hour in the afternoon and mid-afternoon. We just really turn that live stream into a Q&A for new users especially. You know, it's very difficult to discuss issues over the phone. We don't do that. And we try to help people in chat. We give them links to user guides and things like that, but there's really no substitute for popping in there and asking a question. Don't be shy. That chat window is there for you guys, and we always enjoy helping somebody with a new question, because there's probably somebody who's thinking the same thing and they don't want to ask. So the 12 o'clock sessions are everybody is different each day, and the 3:30 session you're always going to have Chris Varley at the end of the day, just to kind of mop up and make sure people got the information that they wanted.
Hey, Steve.
Yep.
Before you go on that next slide, would you address Roger's question real quick? Kind of the stuff we're kind of working on. I know you've been in the dev meetings and stuff like that. Kind of what we're looking for in the future, sure, as far as HTML goes and all that.
Yeah, so obviously MacBook has still not been written for. A decision was made a long time ago, and the priorities of our development team, looking at the metrics of the percentage of users, that really would have required a doubling of efforts of development just to service a whole different platform. So until now, we've got a lot of workarounds, which I'm sure you're aware of, the clouds, the virtuals, the AWS, Microsoft 365, and things like that. But for those that don't know, somebody actually said this the other day, and it's very important, and was happy to hear that those that know trade ideas now, they're probably not going to recognize the interface a year from now. You know, we're getting away from the Windows C++ version. Fortunately, the whole platform was built on the server side, and that allows us to interface in a different way. So we're moving to Amazon Web Services for our data center, and we're writing a whole new API code, which pretty much broadcasts in HTML5. And yes, that means devices, that means handheld, that means web version. So everything a year from now, ideally, will be in an HTML5 platform, and that means there no longer becomes a Mac, Windows, no mobile option. It'll all become available then. So Raj, I hope you hang around. Things are only going to get better from there, but for now, we do recommend those virtual desktops. It's not much. You can get one through AWS or Microsoft 365.
Thank you.
As for mentioned, there's the link. Please, please, please come to these things at 12 o'clock Eastern and 3:30 Eastern, as I said, right there. Very important. If you're not aware of it, you should be, and please don't be afraid to ask questions. We can show you more about our new stock racing, which really is becoming an interesting development. We've been seeing, just to add on what I was speaking there a moment ago, we had a demonstration recently of a link that was passed out from our developers, which was a test link, and they said, here, click this on your phone and then turn it into landscape mode. And there was this beautiful, smooth graphic of a Trade Ideas stock race in landscape mode on your phone. I don't know how far away that is, but the developers have already got their hands on it and they're making it work behind the scenes. So just stay tuned. Tuesday webinars are missing. I'm not sure what you mean about that one, Mr. Das. Maybe you can elaborate. All right, so just a quick reminder, ebook, Dave Mabe, who is overseeing all this stuff that we're talking about, the HTML5 and the new AWS migration. He wrote an ebook. He's also a trader, which is pretty cool. So he's got a ton of knowledge, and that's a link there if you want to read his ebook. So we'll get going here on some prepared content for today. It's missing on your schedule. Tuesday webinars are missing, probably because this one's a Tuesday webinar, and it's just we're assuming that today, I know what you're talking about now. Yeah, Tuesday webinars, these are the other days other than Tuesdays, Monday, Wednesday, Thursday. So today it's every other Tuesday, Parimal. Hopefully that helps. So as we get into the reminder, set the tone here that no human's better than a machine, and definitely no machine is better than a human. But a human and a machine together, they work out. And that's really what we're doing here. We're trying to remind people, look, there's no magic bullet, there's no golden goose. Trade Ideas is not trying to sell the concept that we've got this magic scan that just spits out the money machine so you can go do direct deposit and play golf with your back turned. If you're thinking that, please stop. That's a very unrealistic expectation. It's a two-part system here. You've got to have the human touch. Our AI and our alerts are very good at letting you know in real time, hey, this is what you wanted to see. Now you take it. What do you want to do with it? You know, and that goes for the AI exit as well. I try to teach people who do follow some of the AI signals that you can manage those trades better as a human, just using a simple chart, 15-minute method and a little rule set. So don't think that you can do it without the machine, and don't think the machine can do it for you. All right. So today we've got a lot of trade of the weeks to go over, and definitely nothing to get excited about. Market recap, I definitely have some thoughts about where we are in the market. And then from here, well, actually, if Andy will talk about a couple AI trades, no big deal, that's not in there. Not much to talk about there, is pretty quick. But I figure at this point, by the way, if you're not aware, tomorrow is a big Wednesday, Fed Wednesday. So it's never a real Fed Wednesday at 2 o'clock Eastern until the algorithms try to read the Fed minutes, and they make a new high and a new low. It's basically just a giant volatility session at 2 o'clock Eastern tomorrow. Get ready. So I've thinned out of a couple positions today. Let's just get right into it. Basically, we're going to drill down to some strong sectors, and we'll find out where the strong sectors are, and we'll look inside and see what some stocks are as well. And as I mentioned, if you're sitting on a question about trading or charts, hold on to that, and we'll get to that pretty soon here. All right, so I shall start with the SPY. First off, my observation, we haven't spoken in a little bit. I'm going to do some comparison here. The SPY had a big rough doing at the 200-day moving average. However, when we transpose into the Qs, notice something different there. The Qs never got back to their respective 200-day moving average. So in the back of my mind, tech felt a little weak-handed on this bounce that we had coming off of lows. And in my opinion, really, this was the market thinking the Fed was just going to continue to do what they always do, going to turn around and pivot and say, oh, we were just kidding. But there's been many days here recently, including that was the bad, can't remember what that was, that bad CPI number. And then we've had continued comments from the Fed. That might have been the CPI, but we've had continued comments from the Fed that are basically saying, no, we're not doing that this time. We're serious. We're going to raise rates. And now people are saying, okay, well, are they going to raise 75 basis points tomorrow? That would be the consensus. If they did one full basis point, that would probably spook the market pretty darn quick. But I'm expecting the 75 and then all the wild volatile gyrations. and then we'll see what might be setting up. I'm kind of preempting that because I've got an idea of what you might want to keep an eye on tomorrow. But the market is extremely guilty until proven innocent. It's extremely weak here. And I really want to point out, I'm going to get rid of that. I really want to point out this little island gap down here. Yeah, that gap was filled technically, but still, that's kind of ugly. The market had every chance to fight these moving averages, but we are technically probably pretty oversold. The RSI is not technically oversold, but what I'm saying is we're very much below these moving averages, and there's no real bull case to be made right now. I think people are really starting to fear inflation and the layoffs and the job freezes. It doesn't really matter what I think. It just matters what the price, the footprints in the sand are showing me, and they're showing me the market's nervous, and I'm assuming that could be why. So that's the SPY. There's a gap here to be filled, possible, but who knows what's going to happen tomorrow when the Fed speaks and then he takes a microphone. Anything can happen. It's going to be a very volatile day. That's why we've just been kind of in a holding pattern here for the last 3 days. Go to the Qs, same type of thing. Also had that gap down. The gap was also filled, but we're just kind of hanging out here in this range with this very strong looming overhead resistance of moving averages. She's the 50, starting to flatten and curve over again. There's nothing technically strong holding this market up. We very well easily could see a retest in the days ahead of that prior low. And if that happens, it's going to be scary for a lot of people. So I'm not long. I actually sold pretty much all my speculative longs today because I don't want to be involved with the market tomorrow. I am still long my physical silver fund, which I'll talk about that a little bit later. Oh, look, it's slowing up on me here. Give me a second. I am long.
It's slowing.
It's both. It's just look how long it took a long while to drop. So I continue to stay long PSLV. We're going to come back to that chart, and I'm also long in another account, SQQ. Since we're talking about the market, I kind of put my money where I thought my mouth was, and I'll go to the Qs because that's what we want to key off of. I can't remember when I started these positions. I think I started the position up here at the 20, and then I think I added to it here, and I probably added to it one more time here. So I have a full load of short the Qs, all right? But I'm doing it by way of SQQQ. I will fully admit to you, I don't know what I'm going to do tomorrow. I'm a little nervous. But when I look at the SQQs, they're just floating nice and happily above their moving averages. That's a nice looking daily chart. And I look at the Qs, they're under pressure. So I might have to sit through a lot of volatility tomorrow at 2:01 Eastern and see how the day closes and see how it resolves. But market's looking pretty defensive. Do you want to add anything in the general feel of what's going on?
I was talking to Steve how difficult it is. If you pull the SPYs back up, you had a nice engulfing bullish candle yesterday, and today it just gaps right back down into the middle of that range. And actually, so you typically in a downtrend, when you do get a bar like that, that could be a good sign of maybe a potential turnaround, but not the case today. It just tells you how difficult it is. And Dave made a comment that he's in cash. It's probably I'm very thin right now. I do have a couple of longs, but as a matter of fact, I covered my shorts. TZA, I sold them yesterday for a profit, but I don't know what's going to happen tomorrow either. But it's a good time to be in cash. But other than that, Steve, there's not a really bullish case to be made of the charts.
I just felt the selling. I was trying to work orders to get out of them today. As you know, I was trying to get hit on the offer, and I kept lowering my limit offer and lowering my limit. There are no freaking buyers out there. Everybody's competing on the offer. And I got to tell you, I feel like I actually got a little bit of intelligence today using level 2, trying to work my orders. It was interesting to see that there was just a lot of competition on the offer. It was very hard to get hit. And if you did, you were getting undercut by the dark pools, or another guy would come in and undercut you. And so that kind of gave me an old school feel as well. I'm gonna stay in my short NASDAQ position. I'm in the money, so I'm either gonna, give it all back and then some, or it'll be a good score. I'm in silver and I'm in cash. So,
There you go.
All right. I
All
prefer
right.
the coins over the bars, Dave, only because they're divisible and you can sell them in smaller amounts when they go to a trillion gazillion dollars. Okay, so yeah, there's a
Yeah,
couple
it's
trades over
easier
there.
to.
Yeah, to
All
unload
right.
and
Okay.
how do
Yeah.
you,
Let me grab it.
how do you get change for a silver bar when you're bartering with somebody? You know,
That's what I was just about to say. Yeah.
yeah, it's hard to get change. So the coins work nice, but Andy's going to go over just a couple, you know,
Yeah.
AI trades. The AI has been pretty slow and sluggish lately, but today it was quiet and ineffective.
Yeah, this is the way I prefer the AI. You know, a couple of good calls each day would be perfect for me. I don't like the days where you have, a dozen stocks in here and, half of them are green, half of them are red. Just, I much prefer something like this. I'm longing for the time when we could get something like this. But today, hey, it was interesting. We had a couple of calls within first 10 minutes of trading. I'm on Central Time right here, so these came out. One came out 4 minutes after the bell, the other one 10 minutes after the bell. And they were both kind of what we call pro gaps, stocks in a downtrend. And let's pull up the first one here, which we're on right now. And you can see the stocks in a downtrend. But what happened is we had a gap and go, like Steve likes to refer to that as a pro gap. And there's a reason for this, because what happens is, I'm sure there was news, obviously, on something like this. It gaps up that much. Uh, and you got people on the wrong side, all the shorts that are rushing to cover, and not only that, you have longs rushing to get in the stock. So you get usually or many times a nice little move over the first 30, 45 minutes to an hour. And that's what happened in this trade. CGNX was called in Holly at 43.65, and it looks like you had about a couple of bucks in this thing, close to it, over the the first 45 minutes. So plenty of alpha to be had there. It's a good little trade. The next one, AMX, came out 4 minutes later, and the same thing. You had a stock in a downtrend, gapped up, did take a little bit of a dive down, and then popped back up, and that's where Holly called it right at 17. Great call there, and this one didn't have the monetary move it did, but a percentage move it had just as much, if not more, going from 17 all the way up to almost 1760. So and nice little, really didn't have a bar reversal, 15-minute bar reversal for a couple of hours. So that was a nice no pain. Both of them are no pain trades, and that's what you'd like to see. So a couple of nice calls from Holly today, but other than that, yeah, it's a tough market. It's a tough market for algos, strategies, and that you're trying to put to work in this market. All you got to do is look at the spies today, from highs to lows to back to the middle of the range. It's just it's kind of a messy market right now, going nowhere, as Steve said.
Yeah, it just seems like if you're in something that's not going your direction, you might as well look left and go, okay, what was yesterday's low, and resign yourself
Yeah.
to the algorithms are bored and they're going to push that low and see if they can shake the trees. And sadly, that's what market structure and action has come to. Andy and I used to play in a playing field of mano a mano. You push a button, I push a button, we're good for it, everybody's happy, But
Hmm.
about 2007, 2008, the algorithms took over, and they've really been just trying to exploit human behavior as best they can. Well, you're a perfect example right here. The SPY. Oh no, we're breaking down. Sell. Oh yeah, reverse. So I mean, it's
Hmm.
just it's noise. This is just noise. Oh, by the way, I want to add this. One of the things I'm really going to focus on this short trade is the 5-day. So I'm going to key off tomorrow. I'm going to try and key off. So far, the cues kind of seem repelled by this 5-day right there and right there. So hopefully tomorrow I continue to get that. If I get a bang above and a close above after the Fed speak at the end of the day, I might have to just cover and lick my wounds and say I was wrong. But I'm going with the flow here. I'm going with the right current direction. I'm pointing my canoe downstream and letting it flow rather than trying to get long here and say this is the bottom. So just continue. Okay, so you got my screen on, right? We're good, I believe, right?
Yep.
All right,
Gotcha.
so where do we go next? Let's go to the trades of the week. So I'm going to start right back. Um, let's
Netflix.
see. Well, no, I'm going to go as far back as cash. With I'm serious. I have to remember when this was now. I have to look at the date here. This was August 28th, not cash, but August 28th.
Well, that's what that's what I was
Yes,
laughing at. You put
realize that.
typing in cash.
But I do that all the time. August
Huh.
28th. There it is right there. Okay, so we had the big downdraft, and then there's the 30th. So this was the opening salvo of a Friday. And I looked at that and I said, this was a major rejection there at the SPY. And I think there was reason for this. It might have been Powell saying something, or I can't recall it. It was nasty. Going into the weekend, I said, well, really, this is no man's land. There's nothing to try and pick up here. Sometimes you just have to go to cash, like we were talking about with Dave here earlier, and we're doing again now. And so that was the trade. 1, 2, 3, 4, 5 days of selling. I consider that a victory sitting on your hands those days.
Mm-hmm.
That's the good news. The bad news are the way the other ones really didn't perform that well. Well, I can just use this, I'm sorry. After that came BTU. BTU. I remember BTU, we were buying right here. Yep, the end of August, looking at that nice little pullback and hold, and it didn't. And the stop was to buy it if it, can't remember what the buy trigger was, but it was triggered, and then sell if it broke and closed below the 50. Well, popped back up, still in play, gapped up in a great way, but didn't really, actually, you know what? This might have been, what was the date on that? Let me double check here. BTU was Sunday, September 5th. Yes, so BTU, that was the candle. That was the setup in
Mm-hmm.
BTU. Thank you. I knew that sounded better. So we had a nice bottoming tail wick. The thought at the time was, oh, look at that. It doesn't even want to touch its nice flattening 50, energy crisis, whatever. But the point is, the story didn't pan out. Very next day, it gapped up. Horrible condition for the trade of the week with a giant gap up. Even if you tried to time the pullback, it ran you over and just fell apart. And
Yeah.
it held that day. Technically, it didn't close below. Held that day, technically, but at some point you just got to say no. So hopefully, all these tests of the 50, if anybody was in this trade, all those tests of the 50-day moving average, hopefully it would have gotten you out, 2 or 3 or 4 of them there, and it's still below. So risk management is the lesson over there. The week prior, Netflix. This one was Andy's idea, and it was purely relative strength.
Mm-hmm.
So the document was created on 11th, September 11th. So there it was right there, 9th
There.
to the 12th. Okay, so there's the first candle right there of the breakout. So it actually triggered on day one. The stop was once again to use the rising 50. That's pretty dicey right there, and it's no
Mm-hmm.
fun to sit through those either, I understand, but if you didn't and you were away, you're actually still in. If you are, I'm not. I don't think Andy is either.
I am.
You are? Oh, that's right, you
Mm-hmm.
are. I'm not.
I sold half today. Pretty near highs. I'm still in half.
So when we talk about relative strength, we've been looking at the market a lot today, and it's under pressure. Netflix is not under pressure. Maybe the whole COVID blast, and then whatever for whatever reason was, the subscription declines as people went back to work. But this seems to be rock bottom down here in Netflix.
Mm-hmm.
160 popped up, held that 50 nicely. So when you really zoom out and look at it in this perspective, it's got a lot of room if it can get above that level,
Mm-hmm.
because next level is almost like a vacuum of space up till that. So I'm actually going to put an alert on there
Uh-huh. Sure.
just in case. I mean, there's no reason not to, so I'll use it I'll use it at today's high.
Yeah.
Put an alert in there for today's high, and we're just going to call that relative strength. I'll get rid of that. So that's Netflix. And then lastly, again, CSIQ, you can see the theme here, guys. The
Brutal.
theme that we've been trying to work on the last few weeks here, leaning on the 50, right? Sometimes they work, sometimes they don't. Again, this just gives me another notch in the con side of the market. The sellers were vicious all day long. And in my opinion, that's a beautiful chart. It should have bounced after these two candles. It didn't. It closed below the 50. The good news is, as I mentioned in the email, we had a very tight range of risk there. So you're out. You should be out. I'm not in. I sold. I got out today.
I do too.
Uh, yeah, definitely
It's
been
tough.
thinning
I
the
mean,
herd.
when you see patterns like that, I mean, guys, it's really tough right now. To try to pick, because I'm doing it in the eye as well, and yeah, it's really hard. This is the kind of market that can really run people over.
Well,
Mm.
Christine, if you're a beginner, you started off very well as a beginner because you were in the right stock and you sold half just like Andy did. So now you've
Hmm.
taken those emotional demons off your shoulder, fear and greed. You took off the fear of it pulling back and you've locked in some profits. Now you let the greed run a little bit and you've only got half the size left. And that's really a smart play to do when you're making
Hmm.
money in the right direction. That's what Andy just did. Yeah, very good. Okay, so this is the point where I'm going to start diving into sectors, and then from here, maybe we can create some price alerts. I'm not even going to create price alerts. I'm just going to let you guys write down the numbers. My price alerts are full. I don't want to delete them. Um, also CCJ I got out of. I had to get out of that one too. I hated to do it, but it broke and then could not get back above the 20 yesterday, and I didn't give it much leeway today, so I got out of that one as well. So let's go to the good old sector ETF, and we're going to do an exercise here, which is let's find the relative strength from a sector perspective. All right, so we start with this garbage. That's the backdrop of the market, twice rejected at the 200. The Qs can't even get back to the 200, and the Qs are below all moving averages. The 50s even starting to flatten and turn down, just barely. But that said, let's go through them one by one, and this was sorted by change from the open. So this is the commodity index, or the agricultural fund, excuse me, and it's not interesting to me because it's just getting pegged here under the 200. However, if this can get above the 200, well, then keep an eye on maybe some of those ag stocks. But some of the ag stocks I was interested in, they've just done me wrong. They've fallen apart too. Treasuries, of course, are strong. Why are they strong? Because people are scared of equities right now. So simply, I mean, just a green day. We'd change from the open. You know what? Let's do change from the close. That might be different. Okay, so that still gives us DBA. Here's the commodity fund. A commodity fund is a mess. Gosh, that's horrible. This should have really turned into something, but it dropped into the abyss here. Now it's just intertwined like a net. Not interested in commodities. Now China has been doing really well lately, or Andy had a couple of good days over there, but now it
Hmm.
looks just like our market. It's totally under
Exactly.
pressure. Same thing, 3 days gap down and sideways. Not seeing much over there. XLK is your technology spider. This is going to be like the Qs. So here's where it's going to get interesting. I'm going to start here. Gold. Wow, gold. I thought gold was an inflation hedge. Well, that's what everybody thought. But all we see is this channel in gold. It's pretty ugly. It's not doing what people thought. As I say, the chart is not confirming the story in gold, the commodity. This is GLD. But remember, this isn't backed by anything. This is backed by popcorn, nothing. It's whatever they say it is. It's just like the meme stock argument. Where did these shorts come from? Can you back it up? Or is this just synthetic, out of the air, naked paper shorting? And it is, I'm convinced. I just can't wait for them to be exposed. But my point is, look at GLD, and people asking me, why are you focusing on silver, not gold? Why are you delivering, getting physical, and why are you buying PSLV? Well, here's SLV, the commodity. Again, this is paper. This is trash. This is the stuff the banks use along with COMEX futures to drive the price down. However, real quick, the last few days, gold, yuck, below everything, trying to knock on lows. Silver, well, silver, maybe trying to do a little bird
Hmm.
in the hand there. So I'm getting ahead of myself on silver, but silver is showing me relative strength to gold. And if you want to do the research, I'm sure Dave or you guys have already done this. The silver to gold ratio is really extended, probably more extended than it's been in a long time. So that means that when the precious metal story does catch hold, if it does, I think it will, silver's got a lot of catch up to do to gold based on that historic silver gold ratio. Now let's just look into why I'm in PSLV. How do the technicals look in PSLV? Well, pretty much the same. But what I'm starting to see here is an interesting sector. So we're gonna dive into the silver stocks a little bit. I'm seeing a nice wedge in the one that I'm in, and it's called Sprott Physical Silver. They can back up every ounce that they claim they have. So there might be a day when PSLV and SLV do decouple. Well, I happen to know that Panheim is a good silver stock. Let's take a look at that chart. Okay, well, another fighter. Again, gold in the market, they're rolling over and giving up their moving averages while silver and silver miners perhaps are trying to build this little, trying hard to build a little base camp there. And I have a feeling that this could be interesting going into tomorrow. After the Fed speaks, sometimes gold and silver really do make an interesting move. I would be surprised and bummed and disappointed if we got a giant gap down, but I just feel like when I look at the PSLV chart, it's just looking for a reason with this consolidation above the 10, the 20, and the 50. It's looking for a reason to go, so maybe tomorrow we get that. So let's just quickly look at pause, and we'll use the old trade ideas comparison. Okay, so what is similar to PAS? Well, those look like a lot of gold stocks. They have some gold in there, but okay, KGC, for example. Well, the market's been going to lows. This thing has been building a base. So what I'm trying to drive home in this segment here, guys, is the use of the trade ideas single stock window using the competitors tab. So we started with silver. I mean, I'm not even going to look at the other sectors. I can't quickly, but I just know that this is really where the strength is and where the interest lies. So let's go through this drill real quick. Locked up here. Hang on. Shoot. Why can't I? There we go. So KGC, might want to jot that one down, put a price alert wherever you find it interesting. Who's this? BTG. Could be inverse head and shoulders there. AG, silver, gold and silver. Wow, that's kind of an interesting, long developing roundabout. That's kind of stuff Chris Varley draws all the time, isn't it there, Andy?
That is.
That's, yeah, it's very much, very defined. Very much basing as opposed to equities, which are a little bit under pressure. So there's another one. Some of these are gold and silver. Newmont is not. Newmont is pure gold, so they're really under pressure, just like the gold was. They don't have that little spark of, maybe there's even some nice divergence in there. Let's take a look here. Oh yeah, we want to look at the RSI and play the RSI game. Stronger RSI on weaker price. Interesting. Let's do the same thing with my PSLV. Clear and redraw. Yeah, look at that. So this is what, if you ever want to know what divergence is, it means a higher low in RSI, even though you had a lower low in price. Good signal for a possible turnaround. So I'm glad I checked that too. So we're going through some competitors here. We'll start taking questions in a couple of minutes if you guys have them pent up, but let's just see what else we find here. I want to go back to pause and make that our key. Competitors, okay, we did those. BTGH, Coeur d'Alene is okay, interesting. Coeur d'Alene is a US company, Idaho Mining up in Idaho. Same kind of a thing, kind of an interesting base being built here, very long term. Wonder what it even looks like if we go to, just for curiosity, weekly. Let's delete that. So we've got kind of the weekly base. What was the one before that? It was pause and no, it wasn't that one. It was another one. Was it BTG? Yeah, BTG building a nice base there on the weekly. Let's go through a few more here. And then we'll take your questions. FSM, okay, first Fortuna, silver mining, under pressure. They're not performing as well as PSLV or the others. And again, the general health of a stock or index, in my opinion, is the 50-day SMA. So anything that's been trapped and denied at the 50, I'm not interested in. All right, I'm gonna go back to PSLV, the actual physical fund that can be audited. Where is the 50? It's holding it. So that's the kind of stuff that I'm interested in this sector anyway, as you go through it. Do a couple more, then we'll take your guys' questions. AEM, gold and silver, trying to base. Ego, also getting slammed. So all of these are really fighting their 50. So if you wake up one day and you see the golds going and they're all blasting above their 50, well, it could be the beginning of something good. You got to take them case by case here. I mean, not all these charts look that great. This one doesn't look bad. Minerals, Canada, gold and silver. Okay, I'm sorry, gold, ore, and silver. See, in this case, flattening 50 is kind of interesting. I might even put an alert in that one, like right about there. All right, so that's the demonstration of really just trying to look at sectors and base a top-down approach. I'll continue here real quick just to see if there's anything we missed. There's the 7-year Treasury. Interest rates are going up. Treasuries are going down. Interest rates are going up. Who is this? These are the banks. Banks are getting pinched there in that little financial technical wedge. Airlines under pressure, semis under pressure, healthcare under pressure, biotech under pressure, financials under pressure. We didn't even look at the Russell 2000, same thing over there, small caps, island reversal there, or island break maybe, who knows, we'll see. Here's our silver. It's the best thing holding up here on the daily chart for the last week. And as I thought, I just can't really find anything else that looks interesting in here. TAN, that's, was that TAN that I missed? No, it was IYR, I'm sorry. Oh, this is a good story here. Hearing a lot of bad things about commercial real estate, and boy, IYR is gonna take it on the chin if that continues. Solar broke down our CSIQ call, and there it is. Guys, there's really nothing to be bullish about out there except for, in my opinion, SLV, which is just an index, which is garbage paper. CSLV, that's actually closed below, and my little baby here, PSLV, is closed above the 50, so there's a little bit of inherent strength there. Okay, send some questions on in if you guys have any. We'll just we'll finish on those. Let me see, a couple of people have already spoken up. So hi, Jonathan. On a day like today, when the SPY is down, would it be worthwhile taking a trade from the pullback above the SMA 50, or do you wait for another day? Well, I mean, Andy can answer it, but I'll probably answer the same way. The backdrop of the market's not really conducive to that scan. What do you think, right, Andy, on that question?
Let me see, is the stock, let's see, stock pulling back to me. Yeah, are you talking about an alert window that's trying to find
Yeah,
50?
your pullback to the 50, your
Yeah,
pullback above the 50 stance.
I mean, yes, it's only going to be probably only going to be an effective scan if the market is at least holding up, or you'll find some good ones in there. I do all the time,
You've
but
been
at the same,
trying.
yeah, you have to, if you're wrong, you have to get out. In other words, if it just like we did in CSIQ, I mean, it should have held
Exactly.
that 50, and Steve and I both got out today because it didn't do it. You just got to be, uh, you got to stick to your rules. That's all there is to it, and I'll try those all day long, because I know if I'm right, I'm going to be right big. But if I'm wrong, I get out, take a paper cut, and that's fine.
Yeah, it works best if
I
you
sold that.
can.
I held on to Netflix today. I mean, that's and I made a lot more Netflix than I lost on CSIQ. So that's trading. Yeah.
Well, why don't
So,
you take the next question from Christine, what your plans are for Netflix?
well, since I did bang out for some good profits in Netflix, because I actually bought some more. I'm trying to change your your screen. Let me take a look at it and tell you. So I banged out profit, so I have a little play money. But what I will probably do is, I'm one that if it doesn't do what I anticipated it to do, I get out quickly. So in other words, all things being in the direction that I expect it to go, this thing should probably take out that high, last month's high, within the next couple of days. If it don't, and we come out tomorrow and the market, after the Fed minutes, it just starts tanking, I've been known just to cut for no reason at all. I mean, just because I don't want to, stomach a move all the way back down to the 50 when I have nice profits. That's the
Especially when
beauty about
everybody's
it, is I
looking
can
at the same.
always get back in. If the market turns, I can always jump back in. I have no problem doing that. So,
And
but to
everybody's
answer
looking
your,
at that same
yeah,
level. Yeah, that same
yeah,
breakout level. So you get quickly run over as people bail on these types of setups if they don't work.
Exactly. Yep.
All right, another question coming through. Good. So Ken, yes, okay. If the stock is relatively strong compared to the current market condition, would you still keep your cash or try to tiptoe in? CEG and Bowl are two names you gave me, so let's look at those. I'm not really in the mood to tiptoe into anything right now until the market proves that it's better, but I see your point. What do we got? It's an energy company, okay, electric power, so the story is there, right? Ken, the story is being confirmed by the chart. Look at how the 20-day moving average acted as a backstop. Okay, the momentum kind of died right here, but then the 20 came up underneath it and kicked the price back into action. Today or yesterday, it held that 10 again. So I would just key off that 20. You can you feel free to ride this thing if you wanted to, but if it was me, the minute it closed below that 20, I would get out 5 minutes before the close because that's the way it's going to be. Bowl, we'll take a look at that real quick.
It had a good move the other day.
All right, so Bowl, really nice move, but it's kind of getting into overbought territory. At any given time, you know, this moving average could come right back into play before you know it. They could jam it down on the open and try and scare you out. I get a little nervous when there's that much space between the price and the 10 SMA. So, you know, it's up to you how long you want to ride it, whatever your time frame is, what works best for you. But stocks have a pattern of going forward 3 steps and backwards 2, and that's all I'll say. Okay, Alan, what do you think of Groy? Okay, great. We've got, oh, I know Groy. Groy is the guy who's in PSLV, Rick Rule is involved in Groy. I like that facet of it. I like Rick Rule. He's an extremely intelligent man. And I was watching it when we were first talking about it, but I never bought into it above 5. Then I saw it break below 5 and I just kind of gave up on it. So thanks for reminding me. I don't have a position, but looks like it's really trying to hold a pivot level here for sure. You know, it's below the moving averages. If the sector gets going, this could get going, but the very first hurdle is just going to be this confluence of 3 moving averages. That's a very strong level right there. So there's your
You'd have to let it get above there, yeah.
Yeah, you don't want to let it get below there again and start drifting lower, and you want to get it to close above there. So that's kind of your parameter of what I see. But I'm familiar with that company. And because you mentioned it, I'm going to assume that maybe there's some cool reason that you mentioned it because I can participate if it does something. So I'll go ahead and, wait a minute, that was the daily. I'm going to go ahead and do this. Pop down there about 280, and I'll put in a price alert for myself on that. That's how ideas can come sometimes, just from a simple discussion and a price alert. All right, we're all done. So go ahead. Thanks for all the questions, everybody. Good session. I'll see you again in 2 weeks, but Scott's got some parting announcements here real quick.
Yeah, sounds good. So let's go through a couple of things on the way out. We are a partner with Interactive Brokerage and E-Trade, and for E-Trade, you can get $0 commission trading directly from Brokerage Plus within Trade Ideas. You can connect your E-Trade account, go to trade-ideas.com/E-Trade to learn some more about that. We also are a partner of Interactive Brokerage, and we have a similar arrangement with them where you can go ahead and sign up with Interactive Brokerage and then connect your Interactive Brokerage account within Trade Ideas through Brokerage Plus, manage your portfolio and your trades directly within Trade Ideas or your Interactive Brokerage account. We do have a code for this month. It's Fast Data, and that gives you 15% off your first month or year of any subscription. But if you hit the pricing page up, go to tradeIdeas.com/price. You might find something special there if you're not yet a subscriber. And if you have any questions, email us info@trade-ideas.com. You can find Steve on TikTok at Today Trader. And we have a YouTube handle that's Trade Ideas. Steve is on Twitter at TISteveG. We also have Trade Ideas and some other handles. And we're on Facebook under Trade Ideas Pro. So thanks, everyone. The recording will be up later on tonight or tomorrow on our YouTube channel. You get an email reminder tomorrow with a link to where you can find it. Have a good one. Thanks, Steve. Thanks, Andy.
Good. See you next time.
Thanks, everybody. I'll see you on Thursday.